I always like to start off every show with a little summary of kind of what I saw happening with the market this week. And it was a good week this week. Let me pull this chart up. Uh, April came down pretty much all month
Yeah,
for the
April
most part.
showers bring May flowers,
That's,
you
I
could
guess
say.
so, yeah. Well, the funny thing is that there's always this concept of, sell in May and go away, right?
Hmm.
Because May to November is typically the weaker 6 months of the year on average.
Hmm.
This May's been actually the best month of the year so far,
Yeah.
actually. Now, part of that's just recovery from what we lost in April, but we did get to a new all-time high this week. We're flirting with that even right now. We're right there, so you can kind of see that little V that happened from April down and May up here at the end. The market has had lots of ups and downs here going back to 2019, as you can see,
Hmm.
with the pandemic and the downturn that happened with the interest rate increases in 2022, and et cetera. But really good market right now. I mean, we bottomed out October 13th, 2022, and we have had a primary uptrend on all the time. You look at the weekly chart, the primary uptrend is up. The daily chart, it's up. The hourly chart, it's up. So there's a lot of momentum and there's a lot of things going on right now. And I actually have the hourly chart here also. We started looking at this, what, 2, 3 weeks ago. I just
Hmm.
want to keep looking at it because it's been, if you go back to the beginning of the big run from October 27th of last year to now, the primary trend has been intact, and as soon as it wasn't, it switched.
Yeah.
So I just think it's kind of interesting. Let's just see. And in this particular case, we're just looking at one part of the primary trend calculation, which is just the lows or the highs, depending on whether it's going up or down. When it's going up, you look at the lows. When it's going down, you look at the highs, right? So now we're looking at the lows, and every low has been higher, right? And so you can see we have a little bit of a downturn going on today
Hmm.
as we speak. But it needs to get down to about 52.20 to kind of crack through that last low, and so it just keeps ratcheting upward. And again, that's why we're at a new all-time high. And because we kind of spent some time at that previous high, if you look back there, you can see that hourly data back at end of March and beginning of April. This took a little bit to break through that, but once we did break through it, now it becomes support,
Yeah.
right? So now I have support kind of at that high level, 5250-ish level as far as that goes. So I think this is a really strong market, a really, really powerful money flow that's coming in and kind of creating all of these things. Yeah, and it's a combination of things. You have, here's the CPI report. Again, I'll switch to a different view so we can see this a little bit easier. There we go. Um, So this is the last 3 years of core consumer price index. Now it's at 3.62%.
Yeah.
That's the lowest it's been in the last 3 years. The Fed doesn't pay that much attention to this particular price index per se. This is the one everybody knows about. It's the one that comes out early. And what they are is it's a basket of goods that they're looking at and saying, how much did this increase? In this case, year over year. So in other words, if you look at, last month versus that same month a year ago, yeah, and they're trying to get inflation down to 2%, but that's on core PCE, which is currently at 2.82%. So
Yeah.
we're closer there. But nonetheless, the pattern for both are the same. On a year-over-year basis, inflation is coming down. And if you look at the market itself, if we kind of go back to what's going on here, this motion is happening for a reason. Inflation has moderated,
Yeah.
right? And you can kind of plug that chart inversely on top of each other. As long as inflation continues to come down, the market seems to do well. We have company earnings that have been really good. Over 80% of the S&P 500 companies that have reported beat their expectations. Again, as a matter of fact, I think it's over 75% have beaten expectations over the last 10 quarters in a row.
Yeah, it's kind of, and we're to the tail end of earnings, so
Yep.
this is a majority of companies out there.
Yeah, except for the big one.
Nvidia is the last.
Nvidia is on Wednesday next week, and so Nvidia's been. It's actually I can't emphasize this enough because I've never seen this before. You see lots of big earning numbers come from smaller companies, right? But Nvidia's earnings, as of the last report, were up 486% over the previous 12 months. That's really, really unusual to have that kind of growth for a company of that size.
Yeah.
And they've now become the third largest capitalized company on the US stock market behind Apple and Microsoft. and they can't keep up with the demand.
Yeah, it could be the largest company in a couple
Uh,
of
it,
quarters.
yeah, exactly right. Because I mean, what's happening? If you think about it, their stock went up, for example, last year roughly 240%. Their earnings went up way more than that. That's not normal either. Actually, usually they're kind of lockstep together, or if anything, sometimes the price is exceeding on a percentage basis the earnings growth. So there's still some room to run theoretically, NVIDIA, and if they continue to, have the backlog of orders and have the good guidance going forward, yeah, that could be a fantastic, event for next week. Now, I will say, the one thing you have to understand about the market is it's a representation of human emotion. So, surprise makes bigger moves
Hmm.
than non-surprise, whether that's good or bad. So, in other words, uh, everybody's talking about the election, and and what's going to happen to the stock market because of the election? Well, everybody's talking about the election, and so my opinion is, looking at that, nothing's going to happen for the stock market because it'll already be built into there, because everybody's talking about it. And the analogy that I've always used, and I still think it's a good one, if you're walking down a dark street and there's a big hedge and somebody jumps out from behind that hedge, you're going to be afraid, right? Or surprised. And if you know that person's there in the next scenario, you don't end up being a surprise. So that's where the Nvidia thing will probably have less impact because everybody's expecting this big deal,
Hmm.
Because if you look back to a year ago, May, that's when it really took off.
Yeah, that was their first big. So,
That was a surprise. It was like, wow, it was a huge number, and now people are raising the bar so high it might be a little bit harder for them to jump through. But nonetheless, great company, and that's also a big piece of what's driving this. Microsoft announced this week that they're going to spend $100 billion making a supercomputer for using in their AI research arena, doing this with OpenAI in partnership with OpenAI. That money is being spent and coming through on NVIDIA's balance sheet.
yeah, Meta was a early
Yep.
adopter of their chips, and so they spent a lot of money.
Yeah, now it's going through to utilities, right? It's kind of
Hmm.
wild. That's not I wouldn't have expected that, but it makes sense now. If you're going to build these massive data centers, they need a lot of energy. And they were interviewing a lot of CEOs of utility companies this week. They're not really used to a big demand spike.
Yeah, it's not something they have. Once you have your population, you're kind of
Right.
steady state.
Yeah, you get their seasonal, spikes because of weather and hot or cold or whatever. That's kind of normal. But this is an overall basic spike in the need for energy. A lot of it is clean energy that's being used and what have you. But nonetheless, we're starting to see utility stocks make a run here too. So we're seeing some broadening across the board of this kind of AI piece
Hmm.
too. So I don't know. It's a really fascinating market. I think that there's a lot of pieces to this. You have the consumer. There's some cracks in the consumer here and there, but overall, they're still spending. And overall, their earnings have grown faster than the cost of the things that they're buying, at least based on these, average earnings and then these baskets of goods like
Yeah,
CPI
on
and PCE.
average, an
Yeah,
aggregate
right,
data.
right. You or I may experience different inflation depending on what we're purchasing and what we buy a lot of, as far as that goes. And so you might be more sensitive to one area or another. I'm just talking about nationally across the board, and that matters actually because it's not just what you're spending; it's what everybody's spending.
Hmm.
It's what everybody has to spend that drives the economy. The economy is strong, earnings tend to be strong, and then you start to see more and more gains coming out of the stock market. And so we've got a scenario where we're not that stretched out. We're a little stretched out, but not really stretched out. The PE ratio is a little high, but not wildly high. There's some room to stretch upward here still, and I'm feeling much better about this than I was just because we did take that drop
Hmm.
and we kind of went sideways in a way over about a 5-6 week period. I think that gives us a little bit more ammunition to the upside as far as that goes. So, good time period, good time to be an investor. Great time to have a good exposure, especially to the U.S. market. Although we are starting to see some of the other markets like Europe and Japan
Yeah,
starting
international is
to
starting to
pick
rev
up
up.
slowly but surely. We really haven't seen international outperform the U.S. for a really long time, and when it has happened, it's been so short. It's just not enough to really get
Was the
involved in.
last kind of sustained international Japan?
Yeah, well, certainly in the 80s, but 93, there was a big international run in general, Asia and Europe, and emerging markets did really well in, I think, that 92 timeframe also. So, but that's a long time ago, right? I
Mhm.
mean, that's a way back there. So, and I remember emerging markets having a fantastic run for a while, but of course that hasn't happened for a bit. But it's something probably to watch for. I still think the big story here is the U.S. And what's happening in terms of the AI space. The reason that you might see some of those other places do well is because they haven't done well for so long. So there's some more value there. And so sometimes that kind of catches attention and starts to get cash flow going that way. And then you get a kind of momentum going forward. But haven't seen enough of it yet to say that that's happening, but it's still something worth watching as far as that goes. So